right, traders, just sold the NASDAQ-100 at 4570, right here, 4570. I will explain to you why I'm selling the NASDAQ-100 at 4570 in a minute. All right, so stay with me. So this is a bearish trend. So to have a bearish trend, all right, one must have a bearish trade setup. All right. So without a valid trading setup, there is no winning trade. Very, very important, okay? What I've noticed that a lot of traders can day trade, can swing trade, but sometimes they concentrate more on the signal instead of the price, instead of the trading setup, okay? The best approach is to concentrate on the trading setup. So, by the way, for every trade, there is a risk, okay? So, every trade. So, I am in this trade now at 4570. I may get paid. It may be a losing trade, all right? All right? All the time when you enter a trade, there is a possibility that the trade may be a losing trade or a winning trade. Whether one is an experienced trader or a new trader, this possibility always exists. But how do we manage that? We have to control the risk. We can use stop loss. We can enter the trade at the best place, all right? In order to control the risk, we can use a top-down trading method to control the risk, all right? So here we are, I'm in this trade now. So I want to set my stop loss. So one step to control the risk, because any trade can be a winning trade or a losing trade. Doesn't matter. Okay, so, but there is a high chance that our trade may be a winning trade if we start, okay, with a valid trade setup. If we start with a high probability trade setup. Well, this is the point I want to stress on a little bit, okay? So we can have, okay, a less stressful trading day, all right, if we have, okay, a high probability trade setup. So I want to set my stop loss, okay? 70, 88, let's see here. All right. I will use a 32 pip for this trade, 32, okay, 32 pip. It's quite high, but I want to give room for the price to move, okay? Normally, I would prefer to use 30 pip, 25 pip, something like that, sometimes even less than that. But for this trade, I want to use 32 pips, all right? All right, so my stop loss is now at 4602. I'm going to color my stop loss into pink so you don't forget it. That's there. That's my above the red line, okay? I'm on a 50-minute chart, okay? You may say, George, why are you on a 50-minute chart? I can explain it to you. The reason why I'm on a 50-minute chart is because I entered the trade a bit too early. Now, the best approach when the market is open is to wait the first 30 minutes to see the orders go through first before we enter the trade. But today, I'm entering the trade a bit early. Why? Okay, because today is Friday, all right, Friday. I want to show you here, it's Friday the 13th of November 2015. Traders very often are bearish on the Friday that are 13 of each month, okay? On the any Friday that is 13, traders are afraid. The market usually is bearish, okay? This is a belief. Don't ask me more about it. It's a belief that if it's Friday the 13th, the market will become bearish. That's why market usually, that's what people believe, okay? Nothing special about it, okay? That's it. Because it's Friday, not only Friday the 13th, because the markets, when it's Friday, we are trading, on Friday when we are trading, okay, during the New York session, we have maybe an hour or 30 minutes only to trade. All right, an hour or 30 minutes, maximum 2 hours. But on Friday, I try to think of it like an hour and 30 minutes because the professional will pack up and go for their weekend, okay? So that's why I decided to enter the trade now, so to give more time for my trade. It's a little bit risky, but I know what I'm doing, okay? I want you to understand every step of what I'm doing. So today is 13th of November 2015. The time in London is 52 minutes past 2 p.m. In New York, 52 minutes past 9, okay, a.m., all right? So because the first 30-minute candle is not yet completed, that's why I'm on a 15-minute chart. Normally, we should go to the 30-minute chart and wait for the first candlestick bar on the 30-minute time frame to be formed. But because I want to enter the trade earlier, that's why I'm using the 50-minute candlestick bar. All right, so the first candlestick bar, you see the price gap down today. All right, this is the first candlestick bar on a 50-minute chart. Are you with me? Am I talking to myself? Okay, this is the first candlestick bar. This one here bullish, so it dropped it down and then went up a bit. Okay, so price gap up and then rally up a bit. So you may say, John, where is the gap? So the gap is from here, and then it gap down. Okay, so it gap down to the opening price of this first candle here. This is the gap here. So it gap up and then rally into the gap. All right. If you want to know more about gap trading, subscribe to Day Pro Traders YouTube channel and you understand more. So we price gap down from here to here and then rally into the zone of 50% and 61.8% Fibonacci retracement level. That's why I say subscribe to Day Pro Traders channel, okay? So here, I like this setup here, okay? Price gap up and rally up to the 50% Fibonacci retracement level. I like this trade set, okay, kind of a signal because my trading setup is not on the 50-minute chart. I'm using this rally into the 50% Fibonacci retracement level as my signal. All right. Then I decided to buy somewhere below or near the zone of the median line of the first candle here. All right. So this is what I've done. Okay. Now let's go back now. So like I said to you in the beginning of this video, I was saying that without a valid trade setup, there is no winning trade. So where is my trading setup? Going to go now on the weekly chart. In fact, I will use the daily chart in this case, on a daily chart, okay? So I have been recording videos about the NASDAQ-100, all right? Which are posted at 24 Stock Trader. I will put the link about the 24 Stock Trader in the description section. So you may also subscribe to that channel. All right. I'll also put the link about the multiple time frame trading method. All right. 1 second, please. Okay, right here. So recently, I've been posting videos at 24 Stock Trader channel. Check the link in the description section about NASDAQ-100. And during those time, I was telling traders that we have a triangle that was developing, not yet completed. So you can see the price was here when I was drawing. I say price went down, okay, and then went A, B, C. And we were expecting D and E. This is for forex traders, and possible reversal zone at this point in time, step by step. All right. While we have top traders at 24 Area Wave YouTube on 24 Area Wave YouTube channel, we say to traders, when you see a triangle, don't think like the old-fashioned way, thinking that there will be a continuation, or the price will definitely go up, or the price will definitely go down. always think of a triangle like anything is possible. A triangle is about anything is possible. There is a video at the 24 Area Wave YouTube channel that we call Clear Understanding of Triangle. Check it out. Okay, so we were here. So as we have seen, anything was possible here. The price did not display, did not pull back, but instead break above the triangle and continue to go up. Okay. For me, this move here all the way up here is a distortion. All right, it's a distortion to a certain degree. We will find out later on whether it's true or not. If what I'm saying here is a true distortion, if this gap here, you see there was a gap here. See, there's a gap here. Am I talking to myself? You see, I gap up from this red line here to the pink line here. Okay, it gap up. Okay, it gap up. All right. So, in my view, this is a distortion because there were orders that has been placed here at this resistance here. This is what I say to trade. You are trading stocks. The orders are attracting the price. So that's why we say you see a triangle, think of, okay, anything is possible. Orders are packed here to buy and sell. Orders are packed below here to buy and sell. Now, there is a major resistance here on this daily chart, and there were orders here that had been packed to sell. The market decided to fill these orders that has been placed here to sell. Instead of selling here, the market prefer to sell here, which is the best resistance here. That's why in my view, I can be wrong, in my view, this breakout all the way up here is a distortion. If it is a true distortion, the price will rectify the gap. The gap will be filled, and the price will come back down inside this triangle. All right? If it is a distortion, we will see. Now, so far, my trading setup is what? It's very simple. We talked about it before. It's the best signal. It's beautiful signal. On this daily chart, the price turn around. All right. Okay, so we are looking for a trading setup. Then we are waiting for the signal. And then we are selecting a low-risk entry point. This is the traditional definition of a top-down trading method. The setup, the signal, and a low-risk entry point on different time frame. A top-down trading method is a multiple time frame trading method. Check the link about multiple time frame trading method in the description section. But the definition of a top-down trading method or a multiple time frame trading method is a trading method that consists of using at least 2 time frames. But traditionally, traders will use 3 time frames: the setup time frame, the signal time frame, and the entry time frame. But the minimum time frames that we can use, okay, is 2. So sometimes when I'm doing a live recording, I use 2 time frames. So I go from the higher time frame, then I go to the lower time frame to enter the trade. It is a top-down trading method, okay? Sometimes you will see I will use 3 time frames: the setup, the signal, and the low-risk entry point. All right? But minimum 2 time frames when we are using a top-down trading method. So today for my trading setup, it's very simple. The price turn around. So it's something like this. So price goes up, you see, price went up like this, and the price just turn around, like round, okay? Turn around. You see how it went around? It went like this, up, and then turn around. And look, now it break above the pink line. This is what I call turn around. It went up from, so the starting move, you see here, starts here, all the way up here, and then just turn around. This is a beautiful signal. So this is not only in this case, okay? In this case, this setup is not only a trading setup, it's also in fact a signal because the price has turned around. It's a round move. You see here? It went up and then just turned around beautifully. I like this, okay? You see sometimes the opposite is also true when you see the, okay, price goes down and then turn around. You see, you don't want it to be like a V. You want it to be round. You see the top, how it's round? Okay, it's beautifully round. turn around. You don't want to ignore it. But in this case, it also breaks below where the move has started, which we call this here, this point here, that's what we call a cycle point. So price D below the cycle point. So a cycle point, one is I can tell you now. Okay, so price start a move from here, so it went up like this, and return back to the starting point. So this is a cycle point. This point here is a cycle point. So because it returned back to the starting point, this is what we call a cycle point. So my trading setup, if you don't understand what I meant by turn around, you may see that price D below the cycle point. This is my trading setup in this case. The opposite of a cycle point, another example of a cycle point is price went down, so it start going down from here. And again, you see here, you see this very often on the 4-hour chart, probably turn around. So start going down, going down, going down, and now it return back to the starting point. You see sometimes it takes many days before completing the round. Oh, round, beautiful round. Turn around, roundabout. It's like a roundabout. You are driving, so you return back to the starting point. If you break above the cycle point here and find a support, it's a buy. Here, if you break below the cycle point and find a resistance, it's a sell. So my trading setup here is a sell. It's a bearish trade setup. Price turn around and D below the cycle point. That's why I want to sell. Okay, so this is my trading setup. And in this case, this trading setup is almost equal to a signal because the price itself is turning around. We can't ignore it. Now let's go back again to my 15-minute chart and look at my charts. Okay, it's working beautifully. So I enter 45, okay, 70, and I set my stop loss at 4602 using 32 pips, okay? All right. So here, not only that, the price turned around, which is in fact a signal, and today the price gap down. So somebody sold it now. After the price is turning around, somebody sold it down below the cycle point. I can't wait more. That's why I decided to enter a bit early today, and I sold it at 4.5. So what I did, you remember, I sold it near the median line of the first candle, and here it is. It's going down beautifully. So you can see another pink line here. Okay, I want you to see exactly what we are doing. So there's another pink line here. What's this pink line here? Okay, let's change the color of it because I have too many lines. I'll remove some of them. I'll remove the orange line. I'll change the color of this current pink line into turquoise. Lady, do not get upset with me. All right, so here we are. I'm going to remove also some of my line here. Okay, bear with me as I'm clearing up a bit my charts so you may see clearly, okay, what I'm doing here. Okay, let's keep it clean, okay? All right, I don't want to remove my triangle because I will be recording video for Area Wave traders at 24 Area Wave YouTube channel. And because a lot of traders get into trouble at this point in time, I know that, okay? So we will talk about it, okay? Don't worry, we will talk about it. All right, we will talk about it. Gently, 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 we'll get there, okay? So, okay, that's all I need, okay? So, you see the pink line that I changed to turquoise. What is that? Okay, it's the median line of the gap. So it's a support level. Normally, if this turnaround is going to stop, it will stop somewhere near this line here. All right, it's a support level. So when the price gap up, highlight, okay, the gap with a Fibonacci retracement level and draw the 50% Fibonacci extension from Fibonacci retracement level of the gap. Subscribe to dayprotrader.com and watch all the videos concerning gap trading and Fibonacci. All right, right here, okay? So this is the median line of the gap. It's a key levels. If now it continue to go down, if the price ignore, continue to go down without even retesting the median line of the gap, it means that my original assessment that this move all the way up here is a distortion is correct, which means the market is correcting the distortion that took place here. Others have forced the price up this point instead of selling here to display 1, 2, 3, to display the ABCDE chart pattern, ABCDE chart pattern, corrective triangle. The price went up to fill orders here. Now order has been filled. There's no point for the price to continue to go up. If it is a distortion, well, the distortion will be rectified. Now we are here. Will it be done? Will it be completed today or not? And if it's happening as I'm expecting it, I will get paid. Very simple. All right? But okay, let's move on now. Again, I'm going to go now. I'll go back again to the 50-minute chart because a trader asked me a question about recording live video recently, a TST trader. Okay? All right? So, a common mistake when one is about to enter a trade is the violation of the market pattern. Okay, so here I did not violate the market pattern. On the 50-minute chart, when I enter the trade, because I'm selling, I want the price to be in a declining channel. This is critical for the entry. So one way to improve a bearish entry is to make sure that one is not selling in a rising channel, that one is selling always in a declining channel. All right? If one is selling in a rising channel, one must control the risk and know that it's a bit risky to buy, it's a bit risky to sell in a rising channel. The opposite is also true. If we want to enter a bullish trade, we want the price to be in a rising channel on the entry time frame. Minimum price should be at the support level. Best to be in a rising channel on the entry time frame. We can, like I said to you, there are many ways that I can enter the trade. You may see sometime I enter the trade at a specific price. We can do that. We can do that. We see a bearish trade set up, we can decide to sell at a specific price. This is our own risk. We decided to buy at a specific price. Okay? But I will talk about that in another video about how we can sell or buy at a specific price. We don't want to be the first person to buy. We want to be the second person to buy, because if the smart money has sold it at a specific price and the price now at the same level, we can also do exactly the same thing. But we are not the first person to sell, but because the smart money has sold it at a specific price before and the price now found in the resistance at the same level, we will sell again exactly at a specific price. There is a risk, well, we control it, okay? All right, so we don't want the video to be too long. Okay, we have been talking now for 23 minutes, all right? So very often when we are recording live video like this, okay, until I get paid, very important for me to get paid, it may take some time. So very often what I usually do, I pause the video from time to time to, avoid that the video is too long, all right? So key point about the entry, we want to enter the trade, we don't want to violate the market pattern on the entry time frame. Very, very critical. The next thing that we need to talk about, all right, very, very important, all right? If your signal, for instance, you receive a bearish signal, okay? But a bearish signal on the signal time frame, okay, is in a rising channel, you should understand that that signal can easily fail. It does not mean that the signal cannot work, but that signal is not a high probability trade signal, okay? It can easily fail because the signal is in a bearish signal in a rising channel is a risky signal, okay? Well, I've seen it last time. A trader sent me a chart. I see that the signal is in a declining channel. A bullish signal was in a declining channel. So I'm speaking to a trader now. What I want you to do next time, okay, a signal, if it's in a bearish signal, is in a rising channel, all right, there is a high risk. Doesn't mean that we cannot trade it. If you are trading it, use the tiny stop loss, control it, keep eyes on it, all right? It may fail, all right? If you receive a bullish signal in a declining channel, it's a risky signal. That signal may fail. So we can see a bullish trade set up, okay? Then the signal is fired, but the signal, a bullish signal, is in a declining channel. We put a question mark on it. We can trade it. It's up to you. You can walk away and say, I'm not going to take that risk. You can decide that I want to take that risk. In that case, you control the risk. But you know that, or you understand that the risk is high because the signal is in a bullish signal, it's in a declining channel, or a bearish signal is in a rising channel, okay? The biggest trading mistake is the market pattern, all right? Traders very often will quickly improve their trading if they become very, very strict and disciplined about, okay, the channel. All right, very, very powerful tool. Okay, I'm going to switch my time frame. I'm on a 50-minute chart. I want to go to the 3-minute time frame so we may see the price action, what's going on. All right, okay. I can see my lines here, all my line. Going back to the 50-minute charts, I'm looking for some lines. I want to see them. What is my entry? So it's at a 4570. What is it? It's not on the chart. Okay, let's draw it again. Here it is, 4570. I've drawn it before. Okay, color my entry into red. It's a bearish, so let's color it into red. I will remove this one. So that's my entry there. And my stop loss is at 32 pip at the 4602. That's the pink line here, above the red line. You remember? All right, the turquoise line here, that's the median line of the gap that I have shown you on a daily chart. The price now below that level. Let's see whether it's going to find a support and start going up from here, because if the bearish momentum will stop, it should find a support near the median line of the gap. But if it continues, it means that it's a distortion and there is a high chance the gap will be filled more, okay? Will be filled. So, all right. Okay, so you see on the 50-minute chart, we did not violate the market pattern. In fact, the price came out of though I'm trading NASDAQ-100, all right. If you trade Forex, I highly recommend that you watch the full length for this video. So this will also be useful to you because it's all about a top-down trading method, okay. For day trading purposes, okay. All right, if you pay attention to the green channel here, all right, we are on the 50-minute chart. That's the first channel. The price is out of that channel. We can apply market geometry, projecting the channel. So we measure the width of the channel, and then we project in the direction of the price right here. And then we draw a line that is parallel to the first channel through the end of the width, the projected width of the channel. So I'm drawing a line. Hold on, please. I will adjust it to make sure it's parallel and has the same width like the first channel. So I need to adjust it a little bit here. We'll get there soon. That's it. So the green channel, you see here, the price is out of the green channel. because it's out of we project the channel in the direction of the price. So this will allow us to manage our trade. So you see here, so all right, so near the median line of the gap, there is also the edge of this the first projection of our channel. I'm going to color it now into dark green. That's our first projection on a 50-minute chart. So the reason is the bearish momentum is increasing. The price dropped down into a new bearish channel, and now it's going into the third one now. Okay, you see now? So with the market geometry or channel projection, we can also set target and manage the trade. All right? For this trade, I will leave it open for a while until I'm quite happy with my profit before I take it. All right? So what are we talking about? We are talking about, okay, day trading, and also how we can apply a top-down trading method and improve our entry. Okay, this is very, very important. All right. So because I don't want the price to be too low like this, I just want to put an indicator on my chart because I don't want to look down. I want to look up, but it's going down. So I want to put just for fun. All right. I want to put on my chart my lovely stochastic indicator. All right. That's it. This will allow the price to go a little bit up because I don't want it to be down here like this. Okay. So now I have a stochastic. I use stochastic 1233. Okay. It's nothing special about it. Is my screen frozen? Hold on, please. Let's pause the video for a second. And as I'm trying to figure out whether my screen is frozen or not. Okay, let's pause it, okay? And let's continue, traders. Let's continue. Okay, everything is fine here. I have changed the setting of my stochastic to 833. This is my favorite setting for the stochastic 833. All right. So stochastic is oversold. All right, here my stochastic 833 is oversold. All right. When a stochastic is oversold, it's telling us that the price is at a support level. But if the price dip below that support level and find a resistance, we can sell. All right. When the stochastic is overbought, it's telling us that the price at a resistance level will highlight the resistance level. But if the price finds support above that resistance level, we can buy instead here. See, it went up. Stochastic was overbought. The price was going up. Trade the price, and you will be all right. Okay. So let's continue for our recording. Okay. All right. So I'm going to go now to the 3-minute time frame again and to show you what's happening here. Okay. Where is okay? The turquoise line is the median line of the gap that we have seen on the daily chart. We are below it now, so price still below it. Will it return back above it and continue to go up? We will see. All right. So I'm keeping my eyes on it because I know that we are at the key level. So trying to manage my trade. I'm using 32 pips. How much profit I want to get out of this trade? I'm quite relaxed today because of the first reaction of the price. It is the gap is not filled and the price continue to go down. I will give it more room to go down more. All right, go down more. That would be nice. All right. Financial market goes up and go down for many reasons. All right. So we are in a gap. So if you come near, but by the way, if you come near the level of 4503, if the gap is completely filled, well, I'll take my profit. But in fact, I'll take my profit before the gap is completely closed because I don't like to be, okay, the last person to take profits. All right? I don't like that. This is about my trading style. Okay, I don't like to be the last person to take profit because if everybody is taking profit together, sometimes you see that the price will bounce up, erasing some of your profit. So I try to take my profit before the crowd. All right. Okay. So now I've said enough now. So I clarify what is a top-down trading method. In this example, talking about day trading in NASDAQ-100, okay, my setup was on the daily chart. Price break below is cycle point. Price was turning around, okay, as I explained to you, okay. Now, the signal, in fact, in this case, is equal to the setup to a certain degree, but once again, as the market is open, the price gap down. Well, I can't wait for more. Price is below the cycle point and gap down. I was on a 50-minute chart, which I'm using. So in this case, I'm using the daily chart and a 50-minute chart. So I'm using at least 2 time frame. I'm not using 3 time frame like traditional, okay? All right, top-down trading method. We can use 2 time frame. We can use 3 time frame. Some traders can use 4 time frames. If I'm on a yearly chart, for instance, I can use more than 3 time frames. All right, so I'll see the setup on the yearly chart. All right, I may use okay, the monthly chart for my signal. The weekly chart will be the beginning of my entry. So from the weekly chart, I'm dropping down to the 4-hour chart. I drop it down to the 2-hour chart. I can drop it down to the 50-minute chart to have the bet point where I can enter the market. So talking about the entry, we can use many time frame for the entry. All right, so if I'm using yearly chart, setup, monthly chart for signal, I can start, okay, all right, my entry weekly, 4 hours. So I'm checking my entry for the weekly and down to the 4-hour chart. 4-hour chart can drop it down 2-hour chart, and then 50-minute chart. I can even go down even to 1-minute chart. Can you believe that? We can do that, okay? But for this demonstration, I'm going from the weekly, from the daily chart to the 50-minute chart. That's it, okay? Once I enter the trade, because I enter the trade a bit early, I want to control the risk. I set my stop loss, a reasonable stop loss. The bottom line, traders, do not expose your trading account more than 5%, okay? So you open 10 trades, the total amount that you are risking shouldn't be more than 5% of your trading account. This is the golden rule of money management rule, okay? Golden rule of money management, okay? Golden rule, okay? So very, very important, okay? Okay, so I've said enough. So I'm just looking at the chart, waiting to get paid. So I think it's time now to pause the video, okay, for the second time, because I paused it the first time to check my screen. So let's pause it and come back and see what's going on here, because I've said what I need to tell you now, okay? So hopefully you'll find it useful and put it into use, okay, to improve your day trading. But let's pause it now, and we'll come back and see. But before we pause it, I want to go, I'll go to the 5-minute time frame. Okay, now I'll use instead the 10-minute time frame before I pause it. And I will draw, as always I do, on my live trading, live day trading. I place a vertical line, which I always color into turquoise. And I always show traders the time when we are pausing a video. The time is 28 minutes past 3 p.m. in London. In New York, 28 minutes past 10 a.m. in New York on the 15th of 10:28 a.m. in New York on the 13th of November 2015. Okay, so let's pause the video, and we'll come back and show you exactly what's happening here. If I'm about to close this trade, if I'm about to be taken out of the trade, I will show you that, so you may see what is happening here. Okay, so speak to you soon. Pausing the video for the second time after 39 minutes. You see the time is going fast. Soon it will be 1 hour. Okay, so let's pause it and come back to it very shortly. Speak to you soon. Okay, traders, let's continue. We pause the video here where I place the vertical line, and since then you can see that the price rally a little bit to retest the edge of this trend line. You remember the green channel, and then we project it down. You see the width, that's the width of the first channel, and then we project it down. The price D below the projected channel and retest it here, and traders are selling again on the edge of the channel. My trade is now profitable. I'm going to close this trade now because it's a beautiful trade, all right? More than, 40 pips. All right, more than 40 pips, so it's Friday. I'm checking at the time. The reason why I want to close this trade now, because 60 minutes past, all right, past 4 p.m. in London. In New York, 16 minutes past 11 a.m. In 14 minutes or so, traders, professional traders will start packing up a little bit, gently, going for their weekend. The price may continue to go down more, but I'm happy with my trade now, so I'm happy with 40 people out of this trade. So it was a successful trade, okay, which is good, because we want to get paid. That's the most important thing. We take risks, you want to get paid, and it worked beautifully, okay? The reason why I also want to close it now is because I don't want the video to be too long. The most important thing has been said about the setup, the signal, and the low risk entry point when we are day trading, all right? This is the key message to them. And also, if we want to enter a bearish trade, on the entry time frame, we want the entry to be in a declining channel, okay? So I'm out of this trade now at 4527, okay? We enter the trade at 4570, and since then, since we enter, you can see that it's just going down. Isn't it beautiful, isn't it? Just going down nicely. Traders are selling. It may go down more, but because it's Friday, I don't want to stay around too long. Okay, so I come out now, okay? So if we go back to the daily chart where we were talking about, on the daily chart, you can see that we are approaching a level of 4503. You see the price now 4526. To close the gap, the target is at 4503. All right. So as I told you, I like to be the first person out. I can leave some money on the table, but that's fine with me. So the gas should be closed because it's a distortion. This is a distortion. Okay, so we'll wait and see what's going to happen next week with the NASDAQ-100. As always, all right, do not use a trading video as a signal. Use it to improve your trading strategy. Always test, okay, retest. Use a demo account, practice to improve your trading skill. And slowly but gradually, by the time you know, you start making a better decision. The title of this video, by the way, is a top-down day trading, how to use top-down day trading live. All right. So we were live day trading today, the NASDAQ-100. The setup was very simple. On the daily chart, we see that the price was turning around. Okay, if you understand that, and also break below the cycle point, as I explained to you already here. All right, that was since yesterday. Okay. So today the price gapped down, confirming to us that there will be a continuation because it's turning around and then gap down on a 15-minute chart. So for this top-down trading method, I have been combining the daily charts. In fact, in this case, the setup was almost equal to the signal. I will talk about it in another video, price turning around. All right. And then we switch to the 50-minute chart to enter the trade. All right. There was a gap on the 50-minute chart as soon as NASDAQ-100 was open, and the price rallied on the 50-minute chart to retest the 50% Fibonacci retracement level of the gap. All right. If you want to know more about gap trading, I will put a link of a video, okay, two video, okay, about a simple, let me tell you the title now, I'll put it in the description section so you may check it out. A simple gap trading method that does wonders, part 1 and part 2. I'll put it also in the description section, so check it out so you may understand why primarily up to the 50% Fibonacci retracement level was a good place to look for an opportunity to sell, okay? If you like this video, please give us the thumbs up. If you dislike it, make sure you give us the thumbs down. We want to know whether you like it or hate it, okay? If you love this video, feel free to share it on Google+, on Twitter, and also on Facebook. I share video also on social website because if I think it's useful for traders, I share it so traders may learn from other traders also. If you love our video, now hit the subscribe button, and so you may stay tuned and watch more tutorials like this. We will be recording more live videos. So remember, we have a Joe Trio channel, 24 Ilio Wave channel, we have a 24 Stock Traders channel, and also 24 Forex Traders channel. And subscribe to our channel and stay tuned. We will be recording more live day trading videos. So traders may learn from, our strategies, our best decisions, and also learn from our mistakes. All right, if we have a losing trade, you can learn from it. All right, you can criticize us. So put your comment in the comment section. All right, you want us to record a similar video like this? Okay, put in the suggested section in the comment section. All right, and in due course, we will record a video to answer your specific question. This is the end of this video. We are the GSTW24 traders talking about top-down day trading, how to use top-down day trading live. Until the next time, enjoy yourself and be very happy. Happy weekend to you all, and I'll speak to you soon.